Welcome back to CPA Mastery. In this lesson we focus on the tax treatment of scholarships and fellowships. Scholarships and fellowships are commonly received by students to help pay for education. The tax treatment depends on how the funds are used. Some portions of a scholarship may be excluded from gross income, while other portions may be taxable. The key rule is that scholarship amounts used for qualified education expenses such as tuition and required fees are generally excluded from income. However, amounts used for living expenses like housing or meals are usually taxable. By the end of this lesson, you should understand how to identify qualified education expenses and determine which scholarship amounts are excluded from gross income. In this lesson we will focus on three primary objectives. First, we will explain how scholarships and fellowships are treated under the tax law. Second, we will identify what qualifies as a qualified education expense, which is critical for determining whether scholarship funds are excluded from gross income. Third, we will discuss situations where scholarship funds become taxable, particularly when they are used for non-qualified expenses such as room and board. A scholarship is financial assistance provided to help a student pay for education expenses. Scholarships may come from universities, government programs, private organizations, or other institutions. These funds are typically intended to support educational activities. For tax purposes, the important issue is how the scholarship funds are used. The tax law distinguishes between funds used for qualified education expenses and funds used for other purposes. Qualified education expenses are the types of expenses that allow scholarship funds to be excluded from gross income. These typically include tuition, mandatory enrollment fees, and required course materials such as textbooks or supplies that all students in the course must purchase. If scholarship funds are used to pay for these types of expenses, that portion of the scholarship is generally excluded from gross income. Not all education-related costs qualify for the scholarship exclusion. Expenses such as housing, meals, travel, and optional equipment are generally considered non-qualified expenses. If scholarship funds are used to pay for these types of costs, the portion used for those expenses is usually included in gross income and becomes taxable. Suppose a student receives a $12,000 scholarship and uses the entire amount to pay for tuition and required fees. Because those expenses qualify under the tax rules, the entire scholarship amount is excluded from gross income. This is the simplest scenario and one that frequently appears in CPA exam questions to test your understanding of qualified expenses. Now consider a slightly more complex example. A student receives a $12,000 scholarship. $9,000 is used for tuition, while the remaining $3,000 is used for housing. The portion used for tuition is excluded from gross income because tuition is a qualified education expense. However, the $3,000 used for housing is considered a non-qualified expense and must generally be included in gross income. A typical CPA exam question may describe a scholarship that covers several different expenses. Your job is to separate the portion used for qualified education expenses from the portion used for non-qualified expenses. Only the portion used for qualified expenses is excluded from gross income. The rest must be included in income. A useful exam strategy is to first identify the qualified education expenses in the problem. Once you know which expenses qualify, you can allocate the scholarship funds between qualified and non-qualified categories. This process makes it much easier to determine how much of the scholarship is excluded and how much is taxable. Scholarships and fellowships can provide significant tax benefits when they are used for qualified education expenses. However, the tax treatment depends entirely on how the funds are used. If the scholarship pays for tuition, required fees, or required course materials, the amount is generally excluded from gross income. If the scholarship pays for housing, meals, or other non-qualified expenses, that portion is typically taxable. Understanding this distinction is the key to solving scholarship questions on the CPA exam.